Hello guys, welcome back to yet another lesson, and in today's lesson we are going to look into a new concept, and the new concept for the day we are going to look at something we call relative strength index, or what we call the RSI. So sorry guys, in case you are hearing those noises, it's raining right now as I speak, but the journey has to continue. I have to keep sharing these new lessons, and before you even proceed further, I'll just request you, if you're new to this channel, just go ahead and make sure you hit the subscribe button, which is just below here. Also turn on the notification bell so that whenever I have a new episode, you always be the first one to be notified. You can as well continue and share the video with a friend so that we get to help each other grow. So as I'm saying, for today's video we're going to look into a concept called RSI, and this one, let's start by understanding that this is an indicator. And indicators, something that you need to know about indicators is that in most cases they normally drag behind. So all they just help you to know is to know where the market might move as you get to move further. But it's important, as you get to use these indicators, you also incorporate other concepts. So one of the indicators I use is called RSI, and you normally see it below here on the chart that is on TradeView. On TradeView, you're going to see it in most cases it's down here. So there are different key levels that you need to know about the RSI, and I'll start by showing you some of these levels and what each level represents. So we have key levels of RSI. So we have 100, we also have 70, we have 50, and we have 30, and of course we have 0. So whenever you get to see the market is below, the market is above this 50 zone, and it's above this region, that is it's between 70 and 50. So for that case, you always go looking for buying opportunity. For this case, we normally look for buying opportunities. When you get to see the market is between that is 50 and 30, for that case we go looking for selling opportunities. So it's important for you to get to look at this whenever you get to see the market, for instance, is somewhere here. So for this case, when the market you get to see on the RSI, it's around between 70 and 50, you go looking for buying opportunity. When you see the market is between it's between the 70 and the 100. So for this case, we normally consider that the market is overbought. And if you get to see the market has come to this area, we normally expect to have a pullback so that the market can continuing on the charts going up. So for whenever you get to see the market has already reached between 70 and 100, we expect the market to have a small pullback before it can get to proceed upward. When you get to see the market, the market is between 50 and 30, we get to look for selling opportunities. When you get to see the market is already between 30 and 0, this one we normally consider that the market is oversold. So for this case, when the market is between 30 and 0, it's oversold. So we expect the market to have a little bit of a pullback before continuing going down. And the fact that the market is getting to 0 and that it shows that the market the sellers are really strong. So for that case, we keep looking for more people, we keep looking for more selling opportunities. And when you get to see the market has really stayed on this oversold option, expect the market to have a pullback. So hopefully those are some of the key levels that they are important for you to know about the RSI. So let me just introduce you some two important concepts that you need to know about the RSI. And with the RSI, it's very simple. Let me just open my notes here. So with the RSI, we have something we normally call it divergence. So with the RSI, there's a concept called RSI divergence. And with the RSI divergence is where you get to see the market, for instance, on the chart that is here on the charts. You can see the market is making new high highs. You can see we're making new high highs. This is for the case of the uptrend. you can see the market is making new high highs, while on the RSI we can see the market is making new higher lows. The market is making new higher lows. So for this case, you can see on the RSI, if you get to draw the line, is somehow we have an declining line, meaning the new higher low is just below the previous high. So for this case, you can see where the chart is making new high highs. For this case, what it normally tells you the market is about to change the direction, so the trend is about to change. So it's important for you to notice this. This is what you call the RSI divergence. When the market is making new high highs, the RSI is making new lower highs. So it's important for you to take note of that. So hopefully you're understanding this concept. Hopefully you're getting this concept clearly. So with the RSI, let me just have a quick recap. With the RSI divergence is whereby we have the market making new high highs. We have the market making new high highs, while the RSI is making new high lows. Hopefully that's a concept that you're really getting it right. So this for the case of the uptrend. So let's look into another scenario for the downtrend, the RSI divergence for downtrend. So for this case, the market is making new this is the market is making new lower lows, while on the RSI for this case, the market the RSI is making new lower highs, new lower highs, meaning if you get to draw the line here, you can see showing signs of going up, while on the market you can see we are going down. So what this means, it means we are anticipating this market is going to change the trend, and it goes up. So it's very, very important for you to understand that. So you wait for the market. For this case here, you will be looking for buying opportunity. You will be looking for buying opportunities, and for that case, the buying opportunity entry reasons, we have bullish engulfing candle. We also have things like the morning star. We have things like you could be looking for double bottom, and also you could be looking for things such as we have the hammer. So these are the entry reasons when you want to go with the buying opportunities. Hopefully you're getting these things right, and in case you're having any difficulties with understanding these RSI divergence as well as setting up the RSI, of which I'll be showing you in the charts later as we get to proceed further, just talk to me and I'll be happy to take you through the entire process. That's it for today, and of course I'll be looking forward to seeing you in our next lesson. And of course, don't forget to hit the subscribe button, turn on the notification bell, so that we get to grow as a team, as well as you don't miss any of our new lessons that we'll be sharing now and also in the future. That's it for today. Of course, have a good time, and we'll be seeing you in our next lesson. Peace, guys.